Hey everyone, welcome back to Corporate Decoder. Today, PSKY just filed an 8K to recast historical segment information, and I am seeing a key change that matters for understanding their business going forward. Quick note, this is not financial advice, just my take on public filings for educational purposes. This filing is about how Paramount Skydance is reorganizing how it reports its different business parts, and it shows a big shift in how they see their operations. So Paramount Skydance Corporation, or PSKY, has filed a report to update how they've shown their financial results from the past. This isn't a new issue, but it is a clarification. As they've mentioned before, they've changed how they organize their business segments starting in 2026. They used to have separate segments for things like filmed entertainment and television media. Now, they've combined film and television studio operations into one studio's segment. This makes sense because it puts all their content creation under one roof. The real reason for this filing is to adjust how they presented some numbers in their previous big yearly report, the 10K from February of 2026. They are retroactively changing how they broke down their income and expenses for a specific period in 2025. Think of it like moving furniture around in your house to make the rooms flow better, but for their financial reporting. This new structure combines what used to be their filmed entertainment business with their television media studio operations. So instead of looking at movies and television shows being made separately, they're now grouped together as studios. This is a pretty common move when companies want to show how their whole content-making engine works together. Another significant change is that their premium television channel Paramount Plus with Showtime, which used to be reported as part of television media, is now being moved over to the direct-to-consumer segment. This makes a lot of sense. It means they are grouping all the ways they deliver content directly to viewers, like streaming services and premium channels, into one bucket. This highlights their focus on getting content straight to the customer. Now, here is a critical point that explains why they need to recast these numbers because of significant business deals known as transactions and the NI transaction. Their financial results from the period starting the 7th of August 2025 are not like for like comparable to periods before that. This is a big deal. It means when you look at their financial reports, you can't just directly compare numbers from before August 2025 to after without understanding the shift. They're essentially setting up a new accounting baseline from that date. This filing provides updated segment information in a few key areas of their previous reports. They are revising the busyness section, the management's discussion and analysis, which is where they explain their financial results and also details within their financial statements. This means the changes are woven throughout their official financial disclosures. Specifically, in their financial statement notes, they are updating sections that describe their business, how they present their financial information, how they handle goodwill and intangible assets, any restructuring costs, and of course, the segment information itself. This is where the detailed accounting adjustments are made to reflect the new segment structure. It is important to note that this specific filing, Exhibit 99.1, is only about this segment reclassification for that specific 2025 period. It doesn't include any newer information or changes that have happened since their last big report. For instance, the news about Warner Bros. Discovery possibly acquiring Paramount is a separate, later development and isn't covered here. Other than this underlying segment change. We also see consents from their auditors, PricewaterhouseCoopers LLP. This is standard for filings that update financial information, confirming they've reviewed and agreed with the presented data. This is the core of the filing, the updated sections from their 2025 annual report. It shows how they've adjusted how they talk about their business, analyze their financial performance, and present their actual financial statements to match the new segment breakdown. This is the meat of the reporting change. And finally, the usual technical exhibits, including interactive data files. These are for putting the financial information into a standardized format that computers can read, often used for analysis and regulatory tracking. So what does all this mean for PSKY investors? This filing is less about new financial performance and more about clarity. Companies restructure their reporting to better reflect their current business strategy and make it easier for investors to understand how different parts of the business are doing and how they contribute to the overall company. The move to consolidate content creation into a single studio segment and group direct. Consumer offerings signals a focus on streamlined operations and a clear pipeline from creation to audience. This kind of organizational clarity is a good step for transparency. The key takeaway is that going forward, analysts and investors will be looking at these new segment definitions to gauge the health and performance of Paramount Skydance. It is a necessary housekeeping item that improves how we can decode their future financial stories. What I am actually looking for is how these new segment numbers perform in future quarterly reports. That is my take. Stay decoded. If you found this analysis helpful, please hit that like button and subscribe for more. All the research tools I use are linked in the description.